Imagine you're listening to a conversation about real estate investing. People are talking about cash flow, rental yield, mortgages, and leverage. You recognize the words, but you're not completely sure what they mean. And suddenly, you feel lost in the conversation. This is one of the biggest challenges when learning English for finance, because in real-world conversations, vocabulary matters more than grammar. So today, we're going to fix that. We'll go through 15 essential real estate vocabulary words that will help you understand real conversations with confidence. Welcome to Decode Advanced English on Wealth by Hana House, where English meets finance, investing, and real-world thinking. In our previous lessons, we explored topics such as real estate investment strategies, property analysis, long-term investing, and bank loans in property investing. Today, we'll pause the discussion and review some of the key vocabulary used in the real estate industry. Let's begin with our first word. Word 1, mortgage. Our first word is mortgage. A mortgage is a loan used to purchase real estate. Example, most homeowners use a mortgage to buy property. Mini dialogue.
I've been thinking about buying an apartment, but I don't want to pay everything in cash.
That's completely normal. Most people use a mortgage.
Yeah, I figured. It just seems like a big long-term commitment.
It is, but it also makes property ownership more accessible.
Next is rental income. Rental income is the money received from tenants who rent a property. Example, many investors rely on rental income to generate steady cash flow. Mini dialogue.
One thing I like about real estate is the idea of earning money every month.
You mean rental income?
Exactly. It feels more stable than relying only on price increases.
That's why many investors focus on income-generating properties.
Our third word is rental yield. Rental yield measures the percentage of annual rental income compared to the property price. Example, investors often compare properties using rental yield. Mini dialogue.
I used to think a good property just meant a good location.
Location matters, but investors usually look at rental yield.
So it's more about numbers than just a location.
Exactly. It's about how much income the property can generate.
Next is property value. Property value refers to the market price of a real estate asset. Example, property values often increase in developing areas. Mini dialogue.
Some of my friends invest in real estate mainly for price growth.
They are focusing on property value increasing over time.
So they don't really care about monthly income.
Not always. Some investors prefer long-term appreciation.
Our fifth word is down payment. A down payment is the initial payment made when purchasing property. Example, most banks require a down payment before approving a mortgage. Mini dialogue.
I heard you need a pretty large amount of money to start.
Yes, especially for the down payment.
That's probably the biggest barrier for beginners.
Exactly. It's often what stops people from entering the market.
Next is interest rate. An interest rate is the percentage charged by a lender for borrowing money. Example, higher interest rates increase monthly mortgage payments. Mini dialogue.
Lately, I keep hearing about rising interest rates.
That's a big concern for property investors.
Because loans become more expensive, right?
Yes, and it directly affects monthly payments.
Our next word is loan term. The loan term is the length of time a borrower has to repay a loan. Example, many mortgages have a loan term of 20 to 30 years. Mini dialogue.
I didn't realize how long these loans usually last.
Many mortgages have a loan term of 20 to 30 years.
That's a huge commitment.
It is, which is why planning is so important.
Next is a very important term for investors, cash flow. Cash flow refers to the income generated by an investment after expenses. Example, Positive cash flow means the investment generates profit. Mini dialogue.
I think I'd prefer an investment that pays me regularly.
Then you're thinking about cash flow.
Yeah, having monthly income sounds more secure.
That's exactly why many investors focus on it.
Our next word is vacancy. Vacancy refers to a period when a rental property has no tenants. Example, high vacancy rates can reduce rental income. Mini dialogue.
But rental income isn't always consistent, right?
Right. Vacancy can be a big issue.
So if no one rents the property, there's no income.
Exactly. And expenses still continue.
Next is tenant. A tenant is a person who rents and lives in a property. Example, the tenant pays rent to the property owner. Mini dialogue.
I guess having the right tenant is really important.
It is. A good tenant makes a big difference.
And a bad one can cause problems.
Absolutely. It affects both income and stress.
Our next word is lease agreement. A lease agreement is a legal contract between a landlord and a tenant. Example, the lease agreement specifies the rent and the rental duration. Mini dialogue.
So everything is written in a contract, right?
Yes, that's called a lease agreement.
That protects both the landlord and the tenant?
Exactly. It defines the terms clearly.
Next is property tax. Property tax is a tax paid by property owners to the government. Example, property taxes are part of the cost of owning real estate. Mini dialogue.
I didn't realize there were so many extra costs.
Property tax is one of the main ones.
And you have to pay it every year?
Yes, regardless of whether the property is rented.
Our next word is maintenance cost. Maintenance costs refer to expenses for repairing and maintaining a property. Example, investors must consider maintenance costs when calculating profits. Mini dialogue.
And then there's maintenance on top of that.
Exactly. Repairs, upgrades, everything adds up.
So profits can disappear quickly if you're not careful.
That's why investors always calculate these costs in advance.
Next is property management. Property management refers to managing rental properties and tenants. Example, many investors hire companies for property management. Mini dialogue.
Managing all of this sounds like a full-time job.
That's why many investors hire property management companies.
So they handle tenants and repairs?
Yes, but of course, that also costs money.
Our final word today is market value. Market value is the price a property could sell for in the current market. Example, the market value of the property increased last year. Mini dialogue.
Sometimes I see investors selling at the right time.
That's usually when the market value has increased.
So timing the market matters too?
It does, especially for capital gain strategies.
Today, we reviewed 15 essential real estate vocabulary words, including mortgage, rental income, rental yield, down payment, cash flow, vacancy, tenant, property tax, and market value. Understanding these terms will help you follow conversations about real estate investing and property markets. Real estate investing involves many specialized terms, and in the real estate industry, vocabulary can become even more advanced. So, in our next lesson, we'll explore 15 advanced real estate vocabulary words for investors, Part 2. You've been watching Decode Advanced English on Wealth by Hana House, where English meets finance, investing, and real-world thinking. See you in the next lesson.